Hello, this is Connie and I'm from mortgageunderwriters.com. Every day I get questions from people asking what is my FICO score made up of. So that's why I thought I'd put together this short video to help clarify some of that information. First of all, your score ranges from 300 to 850 points. There are three major repositories that handle this. That's Experian, Equifax, and TransUnion. And what they're trying to determine is your financial stability and a history of responsible credit management. They actually monitor 5 factors. These factors are payment history, amount owed, age of credit history, new credit, and types of active credit. Payment history makes up 35% of your FICO score. And what they're looking for here is whether you pay your bills on time or not. They look for 30, 60, 90-day late payments, collections, judgments, charge-offs, debt settlements, bankruptcies, and foreclosures, of course, are very detrimental. Lawsuits, wage attachments, liens, and what types of liens you may have. The amount owed makes up 30% of your score. How much you owe versus your available credit. As an example, if you have a credit card and an available credit line of $10,000 and you've used $9,000 of it, then that's a very big negative and would probably pull down your credit score. Whereas if you only have a balance of $1,000, then that's good. It would increase your credit score. Typical rule of thumb is not to go over 35% of your available credit. They look at other types of accounts also. And again, it's the balance owed versus the original balance. The age of your credit history is 15% of your FICO score. How old is your credit? How long have you been using credit? And if you're thinking about let's say you have several credit cards, which ones should I close out? Keep the older ones open because they're more important. If your accounts are new, they look at how new are they. And new is really important for the following reason. New credit makes up 10% of your credit score. How many new accounts do you have? They look at your recent inquiries, and inquiries when you go out and actually apply for credit. The reason they look at these things is because typically when someone is applying for new accounts all over town, it's because they have a cash flow issue. Now, looking at inquiries is certainly not like looking into a crystal ball, but it does impact your credit score. They also look at the types of active credit that you have. They like to see a little bit of a mix: installment, revolving, credit cards, mortgages, car loans, that type of thing. And they also look at the total number of accounts. Do you have 5 open accounts or do you have 20 open accounts? And I'm sure that you can see how that would negatively impact your credit. If you're interested in finding out more detailed information about conventional credit guidelines, please go to mortgageunderwriters.com. They have 2 pages on credit. One contains the credit guidelines in order to qualify for a mortgage, and the other is credit repair, how you can repair your credit so that you will qualify. Check out that website today, mortgageunderwriters.com.